Hi, I'm Kara Murphy, and this is Money with Murphy. Over the last week or two, a handful of stocks, companies that sell everything from donuts to cameras to video games, have attracted enormous attention. Driven largely by social media influencers, these stock prices have soared and trading volumes have risen exponentially, giving rise to a new meme stock craze. So, what do investors need to know about meme stocks? Early in my career, I was a stock analyst, spending my days researching companies and tracking every market move. I modeled out earnings, walked factory floors, and got to know management teams. In short, I focused on the company's fundamentals. In contrast, today's meme stock craze, investors openly ignore company fundamentals and instead buy a stock because it's cool, or as one meme stock influencer said, to almost make fun of the financial system. In my mind, not a great reason to own a stock. But an even more powerful reason to not get sucked into this meme stock craze is what often happens after the attention fades. Let's look at one of the original meme stock stars, AMC Entertainment, and more importantly, what happened after the frenzy. Back in early 2021, many of us were still stuck at home because of COVID. Flush with stimulus checks, some individual investors turned their collective attention to a few stocks that professional investors were betting against. There's even a movie about it now. Back then, AMC stock was heavily shorted, meaning investors, mostly professionals working at hedge funds, were betting that the stock would fall. At that time, a full 40% of AMC shares were being shorted, an enormous amount. Short sellers, focusing on fundamentals, believed AMC faced significant challenges, such as weak box office demand, pandemic shutdowns, and a heavy debt load. Then, in early 2021, individual investors started buying up shares. Some believed the fundamentals would return, that earnings would improve, but others were motivated by something else, a chance to stick it to the hedge funds. Many viewed hedge funds as villains who profit from company failures and saw it as an opportunity to protest against this institutional power. A community of online investors rallied together to push the stock price higher, and it worked, at least for a time. More individual investors, egged on by online forums, bought the stock, driving the stock price even higher. Short sellers then wanted out, but the only way to do that was to buy more stock, which drove the price even higher. This feedback loop, otherwise known as a short squeeze, sent AMC stock into the stratosphere. From AMC's low in 2021 of about $12, it rose almost $400, a staggering rise of 3,000% in just a few short months. Talk about a box office hit. Sounds like fun, right? At least if you own the stock and weren't one of the short sellers. This is the part of the AMC story and of other meme stocks that gets a lot of attention. What often gets ignored, though, is even more important. What happened after the short squeeze? By the end of 2021, the stock had fallen from that peak of almost $400 to about $170. Shares continued to drop over the next couple of years, and today, that stock is worth $3. An investor had bought AMC before the meme stock craze and simply held it. Their investment would be worth 75% less today. Meanwhile, the S&P 500 has risen 34% over that same time period. For individuals who were looking to hurt the big bad Wall Street traders, it was actually the individuals who lost out. While every stock is different, and AMC's history is a cautionary tale. So fast forward to today, and a handful of stocks with questionable fundamentals are again seeing their stock prices rise and fall and trading volumes skyrocket. There's a saying in media that sizzle sells, but I also know sizzle can burn. Take it from someone who spent many years as a stock picker. If you're considering any of the recent hot stocks being hyped on social media, remember, market and economic fundamentals are what drive markets over time, not memes. Until next time, invest wisely and live richly.